Tesla stock rallied over 2% today, and it looks like a Santa Claus rally is well on its way. The historical Santa Claus rally tends to actually happen after Christmas, although it's been getting pushed back and extended over a longer time frame in recent years. What can we expect this time around as we get closer to this Santa Claus rally? Are things slowing down in our markets, or are they accelerating? Well, we'll debunk that right now. They're actually accelerating at a record pace. You just had the biggest weekly inflow to the S&P 500 we have ever seen in the history of the S&P 500. Almost 2 times the highest other week period that we have ever seen. So yeah, it's accelerating. Now, where are we going next for Tesla stock and for our broader markets? I think this is imperative. You need to know this information. So let's get into it. Hit the like button and subscribe to the channel. Let me know in your personal opinions where we are going next. Are we going higher, lower, trading sideways? What are you doing in your portfolio and with your position in Tesla? And let's get started. So let's start with just that. The S&P 500 ETF, the SPY, seen its biggest inflow ever last week. Not by a small margin, by a 2x kind of margin. So this is about $20 billion that went into the SPY last week alone. This is 2023. Take a look at recent years. You've seen an inflow of almost $11 billion back here at the end of 2019. You also seen about $10 billion of inflows during about August of 2020. Now you just hit about $21 billion worth of inflows. So this is by far a record. Nothing even comes close to this. Now, what does this mean? Well, you can look at this 2 different ways. Any time in the past that we've seen a big inflow to the SPY, stocks actually fell. During the second largest spike that we have ever seen was right about here, where you did see a large rally, and that spike in SPY inflows didn't exactly call the peak. The market seemed to have rallied quite a bit more into February of 2020, and that spike happened late 2019. So around here, you've seen that spike. So markets did continue higher, roughly about 7% after that, but you did come crashing down. You could make the argument if the Rona didn't happen, that wouldn't have happened in the first place. Now, you also seen a big inflow back here in around August of 2020. And you can see that reflected in the SPY. It went pretty much straight up, kind of like we're doing right now. And then you came tumbling down. This time around, well, the SPY looks a lot more impressive than those other time periods. The SPY is pretty much going vertical, hitting a new high every single day over the past at least couple of days now. And you've seen some really monstrous gains. 7 weeks, in fact, the S&P 500 has been green. There's separate statistics on that we will get into here in just a few minutes. I do want to just err on the side of caution here, and I want to tell you that even though this is fundamentally justified, in my opinion, this rally makes sense on every level possible. You are overbought. You're at about 81.5 on the RSI for that SPY. Anything above 70 is overbought. Don't be surprised if we fall or trade sideways for a period of time. That can happen and most likely will happen. But this inflow tells me something about the longer term picture here. As you know, there's $6.2 trillion in money market funds. That money needs to get put to work. If we only seen 20 billion go into the SPY last week, woo, baby, just imagine what the returns are going to look like in 2024, given this rally is justified. I will say though, besides the short term being overbought, the thing you need to watch for the most, if you are bullish, is a recession. Not just a recession in and of itself, but when the data starts to turn negative. That's when the markets will pull back in anticipation of a recession. Markets are forward-looking, so whether it's forward-looking to rate cuts, 6 of them, by the way, markets are pricing in, or whether it's forward-looking because maybe we're heading into a recession. It's not just one-sided here. So we want to watch when the economic data starts to get bad. That could be a bad personal spending number coming this week. That's possible. That could have a negative impact on our markets. I think it's going to take a little bit more than that to derail the rally at this point. You need to, in theory, counteract 6 rate cuts. You really need to see some negative data here. I'm not convinced that's going to happen right now. I'm really not convinced that's going to happen in 2024 at all. But I would say there's probably a 40 or 45% chance that does happen at some point in the first half of 2024. That's how you get big downside in our markets. Besides a normal kind of 5% pullback, little cool down period, if you're, buying puts now, expecting the markets to crash or fall, you need to see bad economic data. That is literally the only thing that will cause the markets to fall big time. Besides any black swan event that I cannot sit here and forecast, maybe China goes down the poop chute, or Europe, or another bank goes BK, who knows, right? You could speculate a bunch of different potential outcomes there. But without any major black swan event, I think there's a lot more capital heading back into our markets from now until the end of this year, as well as in 2024. Now, I truly feel like I am beating a dead horse here, and that's the last thing I want to do. But I am very confident in this. I have not been this confident in what I'm about to say since the last kind of crash period we had, in which I was calling for after the summer kind of AI rally. I was very bearish in this period of time. Go back and look at the videos in August and July and even June for that matter. I was not bullish on the AI rally at all because it was fundamentally not justified. What happened? We pulled back. I look like a genius. That's fine. That's great. That's dandy. But this time, it's actually justified. So this is what I'll say. The criteria for 2024, if you're a Tesla investor, you're going to love this. Quality, number one, quality, because who knows what can happen. A recession could happen. If that did happen, you want to be in quality, whether it's industrials, whether it is interest rate sensitive names, whether it's small cap names, whether it is consumer cyclicals, discretionary, doesn't matter. You want to be in quality in 2024. Don't go for the dog crap, okay? The names nobody cares about, nobody knows about, that have bad fundamentals, that are probably going bankrupt, zombie companies. Don't go for those. That you're going to lose money. You want quality? You want interest rate sensitivity. Quality small cap names. Quality large cap names. But if it's a large cap name, I think it really needs to be interest rate sensitive or growing at impressive growth rates, like 15% plus. 10%, that's justifiable a little bit. But I think really you want to be in growth names, quality, that are interest rate sensitive. Tesla fits all of those perfectly. There is no better stock that fits those 3 criterias than Tesla. That's why I'm so bullish on Tesla for 2024. It's not just because I like Tesla, love the product, love Elon for that matter, love what he is doing and continuing to do for humanity, besides what mainstream financial media is saying. Those are really uneducated people speaking to uneducated people that like to point the finger at Elon. And that's kind of like Scarface. I would try to say that quote from Scarface, but my Scarface accent is not the greatest, so I'll spare you guys that one. But nonetheless, Tesla is due for a lot of money to head back into the name. And I do think that's precisely why Tesla has been outperforming. And Tesla looks very good on the charts. Really, any day now, you could start to see a much larger rally to the upside. Like, think about this logically. The AI hopium hype that we seen during the summertime sent Tesla to 300. Now we're pricing in 6 rate cuts. Tesla is beating, on all the metrics that we can look at right now. Weekly vehicle insurance registration numbers out of China, that just came in the 3rd best week ever. Tesla is doing fantastic right now. Tesla has a lot of good things going for it in 2024. $25,000 vehicle announcement. That's likely at some point in 2024, as it seems. Dan Ives, Gary Black, Ron Barron, they're all vouching for this as a catalyst in 2024. FSD to enter China. That could happen this month, if not in January, like next month. Those are 2 big catalysts that could be huge fundamental catalysts and impactors to Tesla's business. Okay. What about rates just falling, the economy avoiding a recession, Tesla potentially raising prices? Any of that, like any one of those catalysts, I think is more impactful than the AI hopium and hype that we seen during the summertime that sent Tesla to $300. I think Tesla should be well above $300 right now. It's one of those things where Wall Street doesn't get it until they get it. And I think that could set Tesla up for an aggressive end of the year rally. That Santa Claus rally, well, it might just come for Tesla and specific sectors of our markets, considering the indexes are so oversold. For an example, it would not surprise me if Apple and Microsoft and these other big tech names that might actually be hurt from rates going lower in 2024 perform very poorly the last couple of weeks of this year, last week or so of this year, first couple of weeks of 2024, as capital moves out of those names into interest rate sensitive names. Wouldn't surprise me if that happens. Wouldn't surprise me if the indexes fall, the RSIs reset, but you get a face ripper rally in the other 50, 60, 70% of the markets that are really not correlated to the indexes at all. Think about the names that did poorly in 2022 or 2023 that were really quality names. SoFi, Tesla, Fubo, all these other names that PayPal, all these other names that I personally invest in, Crocs for that matter, quality names that did poorly. You could see those stocks continue to rally, really not see much of a let up at all, as there is so much capital on the sidelines to come back into our markets, but at the same time, the indexes fall. Don't be surprised if that happens. If you are an index investor in 2024, you're probably, I can't say this with certainty, but you're probably going to be disappointed with the return of the index. I'm very for investing in index funds if you're a passive investor. But if you are someone that takes charge of your future and your destiny in your hands, you like to be responsible for the decisions you make, your wins, your losses, your huge gains, your huge losses. Well, I think Tesla is the most financially responsible trade investment you could be in for 2024 because you have quality. You have obviously low debt. You have interest rates working in Tesla's favor. Tesla is grade A, like literally it's investable grade credit. So basically any fund out there that can invest in growth stocks can invest in Tesla. That's not the same for some small and mid-cap stocks. There's so many other reasons that Tesla is really the stock that I want to own for the rest of this year, for 2024. 2025 is a little bit of a toss-up, as we may or may not get a new president in the White House. That's where I think you could be a little bit more vulnerable to actually seeing some form of recessionary event. No president has ever won a re-election if a recession's been going on, besides one, and that was William Taft in 1913. The odds of winning a re-election during a recession are basically none because people vote with their pocketbooks. If you just lost your job, well, people want to blame someone for that. Who gets blamed? The government. Simple as that. So I'm not in the camp of a recession. That means I do think we're in for a big rally here. And I don't think it's going to stop. maybe on the index level, but I don't think Tesla is going to stop here. I think Tesla is going to accelerate into the end of the year and at least in the beginning of 2024. And I'm obviously not the only one saying this. I take in a lot of different opinions. I like to watch a lot of financial media. I like to, consume a lot of content on X. So I take in a lot of different opinions, but I formulate my own opinions, as you should as well. Don't just agree with me because I'm saying these things. Watch a bunch of videos, listen to people's opinions, scroll on X for a while, think about what's logical and what makes sense to you. Fundstrat says, quote, despite a near 20% rally in the QQQ since late October, the amount of cash on the sidelines, now at 5.88 trillion, funds might begin to deploy cash in the new calendar year, which might help to fuel the market rally even more. I'm not the only one saying this. Fundstrat, Tom Lee, the guy that correctly predicted the outperformance of big tech in the Magnificent Seven in 2023, he's calling for a 50% rally in the Russell next year. He's saying all of this cash on the sidelines that is at a record low allocation to stocks, that money coming back into markets can help this rally continue. Ryan Dietrich, he runs the Carson Group. He says S&P 500 up 7 weeks in a row. On the surface, one might think this is bearish. Not true, as these tend to happen in bull markets. Up a year later, 25 out of 29 times, and you're positive 86.2% of the time. So historically, this tends to actually be pretty good. The average return is about 8%, but again, this is for the index. Even the biggest bear on Wall Street, Mike Wilson, has flipped and is now saying that small caps, quote, look compelling, given higher probability of accommodative monetary policy. Ryan Dietrich also says that last week we saw 68% of the components in the S&P 500 make a new 20-day high. This is one of the highest readings ever and suggests extreme buying pressure. Going back 50 years, you are higher 1 year later, 10 out of 10 times, and up 18.1% on average. Yet another clue this bull is alive and well. And congratulations to everyone in the trading community that hit the FedEx puts in the trading community. If you guys want to come trade some of these trades with us, we've been on a hot streak. Check that out, link down below in the description of this video. FedEx was pricing in about 4.5%, so this does look like a 2 standard deviation move. FedEx dropping from about $283 currently to $255 per share, and that is a little bit of bad news, what FedEx just said about their company. This does have implications for the overall economy. So this article says FedEx shares tumble after weaker demand hits revenue outlook. FedEx results fell short of estimates in its fiscal second quarter. The company's express unit was hit by lower demand. The company lowered its full year sales outlook. Yikes, that's not good. Adjusted earnings per share of $3.99 versus $4.18 according to analysts. Automotive revenue of $22.17 billion versus $22.41 billion expected. Again, not great. FedEx reported net income of $900 million or $3.55 a share versus $788 million or $3.07 a share a year earlier. So this is still better on a year-over-year basis, but not quite what a lot of people were expecting. Now, they say, quote, FedEx has delivered an unprecedented 2 consecutive quarters of operating income growth and margin expansion, even with lower revenue. Clear evidence of the progress we are making on our transformation as we navigate an uncertain demand environment. It's not exactly what people wanted to hear, considering they're reporting earnings here today on December 19th. They're reporting Q3 earnings. Like, Q4 is basically over with. So if they really don't have good things to say here, probably means Q4 is not so great. And if FedEx is not doing well, then you could make the argument that maybe the consumer's not doing well. Although we're hearing good numbers it's just one of those things that really doesn't look good. And this trade we actually put on FedEx, we'll see if it hits, but it was $200 into $25,000 if FedEx does close at about $240 by this Friday. If FedEx hits $245 by this Friday, then those positions will go in the money and you could still make some really big gains, but you're potentially looking at a huge profit on FedEx if this thing continues lower, another 5% or so from here, another 4% from here. So yeah, another exciting one. Micron will also be important for our markets coming tomorrow and after hours. Micron is a chip play. It's not the biggest one out there, but Micron can move big. I've hit a lot of big trades on Micron before, and the markets do pay attention to Micron, especially given the AI hopium hype that you still have out there in the markets. That's going to be a big one Wednesday and after hours. Thursday and after hours, Nike, that's going to tell you a lot about the consumer as well. As far as Tesla and the option activity, you had 862 orders today, totaling $1.22 billion with a positive order value of 23%. If you take a look at the volume numbers, about 59% of the volume was to the call side, 41% of the volume to the put side. So things look pretty good today. And by my calculations, short sellers lost over $400 million today shorting Tesla. 3.24% of the flow is currently sold short, with $22.2 billion as your dollar amount that is also sold short. So on top of just funds being underallocated to Tesla, underallocated to our markets in general, with a record high amount of cash out there in the system, you also have a record high short interest in Tesla that can also fuel some buying pressure and an upside move in Tesla stock. Tesla is in fact the most shorted stock in our markets, and I think it's probably the last stock that you want to be short in heading into 2024. Like literally, I couldn't think of a worse stock to be short in than Tesla. I think that comes around to bite everyone in the ass here coming really now, but over the next coming weeks. In some breaking news, Volkswagen just announced they will adopt Tesla's North American charging standards starting in 2025. Volkswagen customers will be able to access 15,000 Tesla superchargers in North America in 2025. Rebecca Tanushi, Senior Director of Charging at Tesla, said earlier this year the North American charging standard was just an idea. Today, with the Volkswagen Group's commitment, almost every major automotive manufacturer is on board, rallying behind a shared vision of improving charging experiences for all EV drivers. This is only the beginning of our industry-wide efforts to accelerate the world's transition to sustainable energy. Tesla has also started letting more people configure Foundation Series Cybertrucks again, so check your Tesla account to see if you're able to configure your Cybertruck. I personally cannot configure my Cybertruck order right now, but I did get my hands on a Tesla hat, so that's pretty exciting. Let's now briefly talk about what I expect from Tesla from now until the end of this year, this Santa Claus rally period, and what I expect from the markets. So on Thursday, you're going to get Q3 GDP data that is final for Q3. We're expecting 5.2%. Again, remember this. You want to see the economy doing well. As long as inflation is falling, the economy doing well is great. If inflation starts to rise, then you don't want to see the economy doing super well. But as long as inflation's on a downward trajectory, you want to see the economy doing well. So that's right now. Inflation is on a downward trajectory. So the economy, well, you want to see it do well. That's going to be a big catalyst. If anything moves big, this is the, I believe, like third estimate. So I don't think it's going to move around all too much. But it's possible that it could. A lot of soft data will come out. Philly Fed data, Kansas Fed data, lots of different things there. The Japanese inflation rate as well will be coming out 6:30 p.m. on Thursday. Friday, this is your big day. You have core PCE month over month, durable goods orders month over month, personal spending month over month, and personal income month over month. I'm pretty much in alignment with these numbers. I think durable goods orders might actually go up more than 2.2%. I think PCE might fall a little bit more to maybe 0.1%. And I think it's possible personal spending comes in as high as half of 1%. but relatively speaking, I'm in line with where these numbers are at. I think if these numbers come in where they are, if not where I expect, a little bit lower on PCE, a little bit higher on personal spending, it will continue to be that Goldilocks data report. And Friday could be a big day to the upside. If I'm wrong, if PC comes in a little bit hotter or personal spending falls more, then it's possible we could get that correction, not really a correction, but a little bit of sideways trading action, a little down movement in the markets coming on Friday. I think Friday's going to be your big day of potential volatility for our markets and for Tesla included. Oh my gosh, FedEx is just getting whacked even more, almost down 10% here in after hours. That earnings call is not serving them well. Now, for Tesla stock specifically, I do think a rally is coming here. I think it would take a lot to derail Tesla right now. It would take Tesla cutting prices. It would take something big because, again, the fact is, you don't want to be short in Tesla in 2024. The economy's holding up. Inflation's falling. 6 rate cuts are priced in. There's a lot of catalysts we know of coming in 2024. I think Tesla stock by the end of this year, which sounds crazy, it's December 19th. By December 31st, I think Tesla stock has a good chance of being $300 per share or around there, right? Call it 290s. That would be a rally of about 17% from here. I don't think that is too crazy. Call me crazy if you want. I don't think that's too crazy. If not, in the month of January, I think Tesla could easily rally into the 300s, which 20% from here would put Tesla stock at about $309 per share. I don't think that's too unrealistic in the near-term future. Now, it's a little hard to trade this with options because you need to see Tesla move big because the options are expensive, and after the last couple of days, they're even more expensive. So I don't think trading Tesla in options makes a whole lot of sense. You could probably do this and be successful and make money here. But I do think just buying shares and holding them, just the classic old-fashioned way, is probably the best way right now for Tesla. If you look at the RSI, Tesla's RSI is at 65.31, so definitely supports the stock, could move higher. The RSI is curling to the upside, still far off of historical, rally terms. If you look at how large these humps are, if you will. I mean, the last 5 we've seen in the last 3 years or so, boom, 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 boom. It's very tiny right now. So you could see a lot more inflows, a lot more strength to Tesla before things really start to look, like we're overbought. We're not even really close to that. If you consider Tesla in July was the most overbought stock on the NASDAQ, the RSI was 90. I mean, the RSI at 65 today supports, to me, we could see a lot more further upside from here, and likely will over the next coming weeks. Let me know what you guys think about this down below in the comment section. Hit the like button as well as subscribe to the channel if you guys want to come trade with us. Link down below in the description of this video. Results are not guaranteed, although we have been doing just phenomenally well. A lot of risk management goes into that. So if you're not keen to risk management, then maybe that's not the place for you, because what we're doing is risky. Anything with options is risky. You can lose all of your money. So that's just what you need to know. But we've been killing it. So if you guys want to come try that out, come be a part of the group, link down below in the description of this video. Thank you for watching. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.